Most traders don't fail because the market is hard. They fail because they never understood what they were trading. Before strategies, before indicators, there are three forces controlling every Forex trade. Currency pairs, pips, leverage. Get this wrong, and nothing else works. The market is a comparison. Forex is not about buying money. It's about comparing strength. Base currency equals reference. Quote currency equals measurement. One rises only because the other weakens. When you trade euro to US dollar, you're not guessing price. You're answering one question. Which economy is stronger right now? You never trade a currency alone. You trade a relationship. How the market measures movement. The market doesn't measure profit first. It measures movement. PIP equals smallest standardized price change. It's the language traders use to measure performance. Moving 1.1001.1005. Those 5 digits are not random. They represent controlled movement. Two traders can take the same trade. One survives, one doesn't. The difference is PIP awareness. Power without discipline is dangerous. Leverage is not the problem. Misunderstanding it is. Leverage increases exposure, not accuracy. It magnifies outcomes, both directions. Leverage doesn't make you profitable. It exposes how disciplined you already are. This is education, not encouragement to trade large positions. Understanding leverage is about protection first. Everything finally clicks. Currency pairs tell you what you're comparing. Pips tell you how far price moved. Leverage decides how loud the result becomes. Every strategy sits on this foundation. Ignore it, and nothing above it survives. If this felt slower than most Forex videos, that's intentional. Because trading rewards understanding before action. In the next video, we'll break down how price actually moves, without indicators. Subscribe if you're here to learn properly.